Hey everyone, welcome back to MSTR Daily. My name is Matt, and in this video, we're going to talk about MSTR's continued strength and outperformance when compared to Bitcoin and the miners. We're also going to look at a report that Charles Schwab gave MSTR, and it had an F rating on it, so we're going to see what that's all about. And then at the end of the video, we're going to talk about the possibilities of a gamma squeeze happening for MSTR in 2025 and what stock price that could bring us to. But before we get into that, check out MSTR Pro in the description to get access to my MSTR options and trading portfolio and see how I'm positioning to make the most of this upcoming bull run and MSTR being added to the QQQ and S&P 500. To start today, let's do a market update. The summer has been so boring with the chop consolidation, but if you've been watching the last few videos, you'll know that the Bitcoin chart has structurally changed, and it appears that we're getting ready to head higher in Q4. Last week, Bitcoin touched $66,000 before correcting to the low 60,000s. And if recent history was gonna repeat, we likely would have seen Bitcoin lose the $60,000 level and head back to our dear friend 58K. Instead, it held 60,000 as support in the middle of this descending channel, which is also at the same value of the 100-day simple moving average. This led to another higher low while preparing to head even higher. This is the first time all summer that Bitcoin has used the middle of the channel as support to move higher. Every other time it has lost this level and gone even lower. So right now the target is 67,000, and who knows if we're going to sit around that price for a while or if it decides to fully break out, but regardless, this setup remains incredibly bullish and I am fully allocated. And with Bitcoin looking strong, MSTR is looking even stronger. At the time of recording, MSTR is just under $190 per share, while Bitcoin is around 64,000. BitPain pointed this out on Twitter, saying this: on March 8 of 2024, MSTR was $170 when Bitcoin was $70,787. At today's open, MSTR was at $184, while Bitcoin was only at 63,000. And then at the end, he says Carisdale equal wrecked. And what he's referring to is a short thesis put out by Carisdale Capital at the end of March, where they announced that they had positioned themselves short MSTR but long Bitcoin. They were trying to arb the premium that MSTR had on its Bitcoin holdings, and as BitPain points out here, that trade has not done well. MSTR is up 8% since then, and Bitcoin is down 10%. So that trade, if they were still holding and paying to keep their short open, would be down big time. However, I will add that these short positions are often short-lived, and Carisdale has not put out any notices that they closed their position, but it is very possible that they have already exited the trade because MSTR did correct 50% after hitting a year-to-date high of $199 post-split. However, if they do happen to be in this trade, then good luck to them. And while we're talking about MSTR's multiple on net asset value, I do want to clarify a few things. Recently, there's been a lot of talk about this NAV premium, and if you go to mstr-tracker.com, it shows the NAV premium at 2.386x. However, this is more of a simple multiple to Bitcoin holdings, or as I like to call it, MBTC, not a multiple of NAV. And you can get to this calculation by dividing MSTR's market cap by the value of their Bitcoin, and you see that they're trading at 2.3x more than the Bitcoin they currently hold on their balance sheet. But I want to show you why the true multiple to net asset value is even higher. A true MNAV calculation takes into account all of the company's liabilities and assets. So when we include MSTR's other assets at approximately 267 million, and other company liabilities of 313 million, the liability column grows, which actually increases the multiple that MSTR is trading at. This also takes into account over $4 billion of Bitcoin-related liabilities, which MSTR Tracker does not use. So when you account for the true multiple to net asset value that is priced in MSTR's stock, it is sitting at a true multiple of 3.16 at the time of recording. So if you are an MNAV bull and have high hopes for the multiple to net asset value that MSTR could trade at, the possibilities are even higher than you may have originally thought due to the difference between these two numbers. I will say though, as MSTR grows its Bitcoin stockpile and takes on billions of debt that will be melted away through inflation and other financial engineering tools, using a simple MBTC calculation is definitely a more simplistic way of looking at the premium of MSTR. This could be more helpful because the liabilities will melt away with inflation and the non-Bitcoin assets won't increase at a rate necessary to have such a large premium. However, for the sake of accuracy, I still prefer a true MNAV calculation, not just a calculation with MSTR's market cap divided by the value of their Bitcoin. Next up, we have this tweet from Jeff Park who says this: MSTR is the only trade in the world that is simultaneously long global carry and short global carry, a valuable thing that represents pure financialization of the hardest asset in the world, capitalizing on both global liquidity and scarcity. 60-40 and 1, don't fade Saylor. And Jeff, I have to agree, Saylor and the other executives are putting on a short global currency, long hard asset trade, and it is the best performing equity in the US market since August of 2020. I wonder how long it will take for other big players to join while it's still massively accretive. The next chart that I want to look at was put out by Trend Spider on Twitter, and it shows MSTR in a near picture perfect bullish rectangle pattern. Obviously, MSTR trades with a high correlation to Bitcoin, but with that chart becoming bullish, along with this chart looking like MSTR wants to to break out, we could see MSTR continue to expand and break out to new highs. And as you all know, $313 is the stock all-time high price, which it reached back during the dot-com bubble in 2000. So it's definitely going to be a fun day when MSTR can break above that level after over 20 years. And I don't want to rub it in, but I have to share this tweet from Caleb Franzen, who shares that WGMI, an ETF for the strongest Bitcoin miners, is only up 3.7% year to date, while MSTR is up 195% year to date. I'm sure the miners will do well when Bitcoin finally gets to all-time highs again, but it is a brutal business, and those aren't companies I want to hold for the long run. Okay, for our next story, we have a funny screenshot of an MSTR equity ratings report generated by Charles Schwab. Now, this is generated by a bot, but it's still a funny report and demonstrates the impact that the FASB fair value accounting changes will have on MSTR. And because of the stock's volatility and negative earnings per share, Schwab has given MSTR an F with a strongly underperformed rating. It has high volatility with horrible grades on valuation, stability, growth, and quality. Now, just to reiterate, this is a report that was randomly generated by Charles Schwab, but the irony of having an F rating while being the best performing stock over the last 4 years is pretty funny. For our next story, I want to delve into some speculation about a possible gamma squeeze on the horizon. Investors love talking about short squeezes like in the case of GameStop and AMC back in 2021, but with MSTR's short interest as a percent of the float at 14%, this isn't a setup for a massive short squeeze. However, we may be in gamma squeeze territory. And just to catch everyone up to speed, a gamma squeeze is spurred on by a sudden surge in buying activity for call options or selling puts. When a large number of call options, which represent 100 shares of the underlying stock, are purchased from a market maker, the market maker essentially becomes short the stock. The market maker has an obligation to deliver the shares if the option is exercised. If the stock price rises, this short position exposes them to potentially unlimited losses. So to hedge this risk, market makers buy the underlying stock itself to offset their short position in the call options. Ironically, this additional buying activity from market makers propels the stock upwards, the opposite of what they want, creating a snowball effect. As the stock price climbs, it incentivizes even more call buying, thereby perpetuating the cycle. So to summarize, when investors are buying a disproportionate number of calls over puts and the stock is increasing in price, it incentivizes more derivative exposure and turns market makers into forced buyers of the stock to remain neutral. And this is a situation we could totally see in 2025. As MSTR breaks above $200 per share and goes to new all-time highs with Bitcoin doing the same, the bull market will be on, and that brings in max degen behavior and max leverage, and one of the main vehicles to leverage returns is to use call options. And as more contracts are quote in the money and eligible for exercising, that's when there is max pressure on the market maker to buy and hold the shares in the case that investors exercise their options and purchase shares at the given strike. Back in July, Jeff put out this post on Twitter where he analyzed the option chain for the possible expirations at the time. And he highlighted that there were over $700 million worth of in-the-money calls for the January 17th, 2025 expiration, which represents over 10 million shares post-split, or above 5.7% of the float. And when he did this analysis, MSTR was at $129 post-split and has increased its share price around 50%. This means that there are now even more calls that are in the money for the January 17th expiration and likely represent more than 6% of shares outstanding. And if I'm losing you right now, all I want to say is that the conclusion is very bullish. And we have seen gamma squeezes in recent history, most notably with Tesla. Going into 2020, Tesla was a normal company that was growing as they built and delivered on key vehicles like the Model 3 and Model Y. And going into 2021, they experienced a gamma squeeze that brought the share price to over $400 a share, and it hasn't been able to get above that price in over 3 years. It was going up exponentially similar to Nvidia and now MSTR, which incentivized the market participants to buy calls, which forced the market maker to purchase 100 shares for every contract that led to a reflexive loop that brought Tesla near the top of the S&P 500. I'm not saying the exact same thing could happen with MSTR, but it is definitely possible that we get a squeeze and reflexive loop in 2025 that brings us to price levels we never thought possible. So with that, if you enjoyed the video, consider hitting the like button and check out MSTR Pro in the description below. Thanks for watching, and I'll see you in the next video.